Good evening, good afternoon, good morning. I think we have quite a few attendees all around the world today. So thank you guys so much for joining this Sunday chart show hosted by myself, Jake Wajastik, one of the founding team members of TrendSpider. And we have Nick Giannotti as well, bulltradefinder.net founder and one of our partners at TrendSpider, who's really done a ton of great work over the last couple months that he's been working with us. So thank you so much, Nick, for joining today.
Yes, thank you for having me, and hope everyone enjoys the little session we have going on here.
Beautiful. Well, as always, we're going to go over a quick disclaimer. Nothing that we talk about today is going to be advice, any type of buy-sell signals, anything like that. This is simply just to highlight some of the features on TrendSpider for those that have been on the webcast before. I'm sure you're tired of hearing this, but we always got to be safe on our end and just let everybody know that this is more of a overall demo of the platform with real life use cases rather than oh, you should buy this, you should sell this. That's not what this is about. So I just wanted everybody to be up on the same page with that. And we will go over the agenda really quick, which first we are going to jump into the broad market. So I'm going to do a little bit of a broad market overview. Nick's going to give his commentary as we go through that. And then I'll hand it over to Nick to introduce himself a little more, as well as do a case study on a couple different charts he's been looking at. We do have a Neo chart that was interesting last week using the anchored volume profile that I wanted to talk about. And then we'll do a couple chart requests as well at the end, and also tell everybody how they can really become an affiliate as well if you want to help spread the word about TrendSpider. So without further ado, Nick, just so we kind of have a quick introduction, do you want to introduce yourself real quick and tell us a little bit about Bull Trade Finder?
Well, first of all, I want to introduce the market. It's down 3% right now on the futures.
Wow.
Yeah.
Well,
that's one thing I just looked at.
That is going to be interesting tomorrow.
Yeah, correct.
Oh, well, that's, yeah, you can see on the chart, crucial.
How you guys doing? It's Nicholas Giannotti, or Bull Trade Finder here. So just a little bit background on me. I started trading at around 17. I traded with a joint account, so I was able to do that. I started with around $2,000 of my own money. At first, I was only trading penny stocks. Within a couple of months, I actually lost from $2,000 to around $800, and I added in a couple hundred. I believe it added up to around $1,250, and from there, within 3 months, I turned $1,250 into $52,000. From there, I had a lot of bumps in the roads, up and down, spikes on my account, but I started to learn options. I definitely, learned. Oops, sorry about that. I definitely had some mistakes in the way, but it's all about growth. It's all about learning from your mistakes and becoming a better trader. And following the broad markets. Now, with options, I feel like I can make a steady income, daily. I could see levels, I could see patterns, I could see, anything that really pops up in the market. Obviously, with this upcoming week, it gets choppy. There's a lot of movement, a lot of volatility. So that's something to, keep in mind. But that's a little bit about me, and I'm ready to go into it if you are, Jake.
Yes, I am. Just a quick note. I can't count on one hand how many accounts I've blown up over the 15 years I've been trading. So for those of you that have, that's pretty normal. So it's always a work in progress. As you mentioned, there's always something new to learn. I think everybody's going to get a nice learning experience in the next couple weeks. And let's just kind of dive right into it. So when we've got big moves down like this, I generally like to kind of pull up the longer term chart just to get a better idea of kind of, are we still within, the longer term trend? And if we do draw a trend line kind of combo similar to how we did here in 2000, around the 2000 crash, and then another one here around, 2008, we're technically still within this, what I would call like a status quo line here. notice that the status quo in the markets really did not break until these two lines broke. You'll notice that, the slope of this line here is slightly different than the dot-com bubble as well as the 2008 crisis. So each one of these kind of set of lines does have its own personality. And the one thing that is similar with 2000, 2008 is the fact when this kind of hardcore support line did break down, that was a status quo changer. So it doesn't necessarily mean, if we do break down through this level that the same thing's going to happen here. But, last week was pretty intense. I've never seen pre-market, gapping down 2 to 3% day after day. That was honestly some of the most fascinating stuff I've ever seen. And it, started to make me think, is there some type of maybe deleveraging event going on in the market? Oil is really taking a hit, and a lot of these oil companies do have a lot of debt. So that's something to consider. And, from your perspective, Nick, what are you thinking? Are you thinking this was kind of a much needed correction because we're so overextended, or is this bigger move down last week maybe something to pay a little more attention to?
I definitely believe we definitely needed a correction. I mean, we were let me bring up, just looking at that, it's straight up. I mean, obviously we had some, dips, but we definitely, especially in the last, 2 months before the actual fall, it was just straight up every day.
Yep.
So there was definitely some correction needed there. But overall, we have the virus news. We have countries pumping money repeatedly into the market. So stuff like that, adds up in my opinion, and I think we definitely deserved a fall, and many people didn't expect it to drop, 15% in 6 days.
Yep. And if we look at past performance on this trend line, and essentially what I did was I just drew a main trend line, and then I kind of offset those with two parallel lines, one on the bottom, one on the top. And you can see how well the price action has kind of respected these three lines. And so, if we look back in time, this is not normal. This is pretty common. It's just the gravity of the situation that we dropped that quick, I think, is making this a little crazier than it seems. But I mean, just drawing a basic trend line where we just broke out, we're kind of right around the previous breakout spot. So, if we look back more than 6 months, it's like, oh yeah, I remember when we were trading in the 270s, the 280s. It was quite a long time. So, maybe a little shocking how quickly we got there and how many gaps we filled below. But, it's one of those things that, you kind of need these things over time. I did want to bring up this as well. This is SPY on the 65-minute chart. You can see that a lot of these gaps have filled below. And, generally, if I'm looking at a chart, I'm looking at where the gaps are. So, these were targets below. As I mentioned, it was a little quicker than expected, but gaps need to fill. It's just kind of part of the process. Interesting. We do have one more gap that somebody pointed out to me today that I didn't necessarily see. And that one goes way back in February. I can't remember the name of someone who mentioned this, but shout out to them for mentioning this. We technically have a gap here around 272. We technically have a little gap here as well around like 264. So, there still are areas below. And if you pull up the Qs, I mean, the Qs still have like three to fill. And if futures are down 3%, I mean, it would make sense for possibly these to fill, below. Now, as far as a time frame goes, I'm using the 65-minute just because that's something that a lot of our partners use, and something that makes a lot of sense if you're just dividing the market by 390 divided by 6 would be 65 to get 65 even candles on the day. But I still like to use other timeframes as well. Nick, what are you typically using when you're trading or when you're kind of doing analysis?
So, especially in this volatile market, I'm mostly looking at short periods of time, 5-minute, 15-minute hourly, possibly the 30-minute. So that's one thing. One thing I wanted to bring up while you were talking about SPY and all these other indicators of the market is we have so many events going on this upcoming week, such as we have sales reports, we have what do we have? We have jobless claims coming this week. We have Super Tuesday. So stuff like that is really going to affect the market, in my opinion. So that's something to look into as well going into this weekend, not just even the coronavirus itself. But yeah, for my time frames, I focus on if it like this volatility, I'm doing 5 minutes usually. I see a lot of patterns on it that you may not see in other time time restraints.
Nice.
But when I focus on long term, currently, this in this instance, it's not that time, but I like to look at the daily a lot. That's how I trade a lot when I'm going long on a stock.
Yep.
So that's another time frame I'd use. But yeah, obviously you're going to see a bigger picture on daily and weekly. Honestly, in my opinion, there's a lot of supports and resistances. If you look at the daily and the weekly, you can see a lot of things. People kind of, fray away from the weekly when honestly it's one of the biggest ones. You could see real strong supports and resistances, either trend line wise, volume profile wise. So it's something to look at as well going forward for many traders.
Yep, and it'll be interesting to see if this holds on the Qs. This has been a pretty strong area of support, but as soon as too many people start looking at an area of support, it breaks down. So that will be definitely something that I'm watching next week. But I would say probably the main thing that I want to note on I guess my part of the presentation here is the back test on the VIX. I'm not sure how many people have used the back tester on TrendSpider, but especially in times like these where you want to go back historically and say, all right, when has this happened before? And if we look at the VIX, this is a great example of not happening too often, which is a close above 35. So if we go and test this out, notice I've got, let me change this to weekly. We've got a weekly price close greater than 35, and we want to test that after 5 candles have passed, which would be, in this case, 5 weeks. So if we test that and see it on the chart, you'll see that we've got 16 different positions analyzed. The mean trade return is negative 15% after 5 weeks. So if we look at the statistics, there have been 3 instances where the VIX actually did continue up, and those were in the 2008 crisis. So, the point I'm trying to make here is we're either in a very interesting point in time where there's some type of underlying deleveraging event going on or something that's creating this spike, or we just needed a really strong spike in the VIX to kind of reset the market, which, would seem pretty, evident by the huge crash or move down. I wouldn't say it's a crash, but I'd say it's a strong correction. But notice here, there have been times where the weekly VIX did close above 40 during the financial crisis in 2008, and we continued up and closed as high as 78 on the weekly chart. But notice that's only happened, not a ton of times. This high of a reading on the VIX is quite impressive, and we haven't really seen it since 2011 when we had some of those Europe woes going on. And so this is really interesting to see if, is this going to be a one and done, or is this going to be kind of like one of these instances where you've got, kind of an area where you stay elevated for quite some time. So, I don't really know what's going to happen, but this would be a scenario if this was kind of a bigger problem. And, anytime that China completely shuts down and they can't, keep the economic machine going, it's always a little bit of a question of what's going to happen next. So,
I agree.
From a VIX perspective, it does look interesting.
Yeah, definitely. I mean, what they said this weekend about, not having their production levels are so down because, a lot of things were closed. That's something to worry about.
Yep, 100%. So, those are 2 things that I'm kind of keeping an eye on. One thing that I also like to look at is IWM. And you can see, IWM since 2008 is kind of possibly, it depends on how you draw this line, right? We could draw it that way, or we could kind of draw it this way, which kind of would show a bigger breakdown happening right now. But you can draw this. That's the thing about trend lines and how they're so subjective. You can draw this a million different ways. We can do wick to wick here. We can do body to body or body to wick, which I did here. I usually don't do that because I like to keep it consistent. But there are times where a trend line is not going to be perfect, and you have to kind of use it as a line of best fit rather than in a precise area. So, kind of like the rest of the markets, this trend line is still intact. That can easily change next week, but you kind of have to give what the market or take what the market gives you for now. And no one knows what's going to happen, but we do know that this has been a historically big demand zone in the past. So that's all I wanted to kind of talk about on the broad market side. Nick, I do want to hand it over to you so you can do a couple case studies, and once you're done, I'll do one or two, and we'll hand it over to questions and some chart requests.
Yeah, definitely. Let me join in on this. Hold on one moment. Yeah, but going over what you said, we are at close to levels that if we break below, we could be in a bear market. And like I said, we had a 15% move in 6 days, something that's really unheard of. If you look back over the market's existence, it hasn't really had a move that big, and I think since some of the earlier crashes, if even that, so
Yep.
That's something to look into too. But the way they pulled it back in the last 3 minutes, Friday was pretty interesting. It actually hit off levels that I said to my group before the market opened. I said 28.54, and I believe this is for the futures of SPY, by the way. I think it was 28.54, and it actually hit 28.53.25. That was a level, and it bounced right off of that.
You're not showing your screen yet, are you?
Yeah. No, I'm not showing my screen yet.
Okay, there we go.
There we go. All right, so right here. Let me go into a daily chart. Hold on. So this is Thinkorswim. This is just one charting that I do. Let me go into this. Oops, sorry about that. Okay. So you see this level right here. We hit that 28.54. That's what I was looking at. Now if we look here, here's one of the case studies I was going to do, ANET. Let's see where it's at. So here's one thing I was looking at too. The volume by price right here. Look at all this demand down here, supply down here, and support. And we wicked right up over it, and we closed into the higher level of it. Where in this level right here, we had no support really, and we just kept falling. And we fell through trend lines. We fell through the, which one is this? The 200 SMA. And we just kept going lower right into the support down here. What I had charted and told people in my room as well, and I also posted on Twitter, is where's the level here? I think it was 286, like 83. There's a lot of support down here. We have a lot of wicks ending here, a lot of candles closing and opening here. And then where we actually hit with this bottom wick here, we had wicks down here, more wicks, opening, closes. So this whole, level right here, let's see. Let's just put it like this. We had a lot of support in this area. And even, I'm just going to draw lines just to show what I'm talking about. Let's see. That's not good. Oops. Sorry about that. Where's that 286 level?
Beautiful.
Yeah, it's 286 level. We had a lot of open and closes on the wicks and stuff like that. But this volume by price, which actually you got me into, is something that I really focus on a lot now when going into my trades. You see all this supply down here and support, and it just totally bounced right off of it and went straight up. And like I said, it was only the last 5 minutes of the day, but it definitely, acted as something.
Absolutely. It's just crazy how oversold we are in the RSI as well. That's
Yeah, true.
that's impressive.
We're at 20 or 1950. Yeah, no, we went from a solid like 65, 67 all the way down. Went from 33.97 to, oh, wait, sorry. That's on the futures. We went from 339 to 285. Yeah. It's a big move in 6 days or 7 days. All right, so going on to the case study I have here. So here's one play that I was in a while ago. I have the arrows here alerting my entry and this one as my exit. This is how TrendSpider has helped me with my technical analysis. These trend lines, this indicator here, the volume by price, it's definitely, influenced my charting and trading a lot. Right here, it gave me a good signal that, it's holding by support. We close over here. We have support here. So I entered on this push up here on this candle right here. And within a couple of days, we went up from, let's say I entered at 193 and we went all the way up to, 208.65. I believe I sold a little bit down on the candle, so like 206 level, but still in, 6 to 8 days, I made $14, and I did options on that. So that was a good play right there. And this support level with the volume by price definitely intrigued me to enter as well, as well as the trend lines. And the software that you guys have made on the site is amazing. So kudos to you guys, seriously.
Thank you.
Another one I wanted to go over is ECL. Same kind of thing here. I focused on the trend line support as well as the volume by price. So we had some bottom wicks here that went into the support level here. And I entered on the second wick. And from there, after about 2 weeks, we went to around this level at 198. There was a lot of resistance level here. You could see all this volume here. And you could see how it kind of resisted and went down. And I sold on this candle here because actually the next day the market fell. Luckily, I kind of got out and made a good profit. Either way, though, if I held on this candle, I would have made a great profit. But just by two simple things, these trend lines that, TrendSpider automatically does for you, which is amazing, and the volume by price have definitely influenced my trading and, made me a better trader. Now, I look at Thinkorswim, like I've told Jake before. I look at it, for example, I look at it, by myself, see how it's moving, and then I double check myself by looking at TrendSpider. And if I double check myself and I see what I like on here, then I'm definitely going into the trade. So honestly, TrendSpider is just another tool that I use to my advantage to ensure that I believe a trade is safe for me and I could, put a decent amount into it.
Love it.
Jake, anything you want to go over? I believe, oh, actually, wait, I do have one last thing. Let me bring this up.
One thing I want to mention we had a comment on for Derek. One thing that's really cool about the anchored volume by price with TrendSpider is the anchoring part of it, where you can actually start the volume by price, not just from the history. It's actually, manually decided where you start that from. And that's what I would say makes the volume by price unique on TrendSpider.
Yeah. And as you showed me, you would want to start it on a trend reversal. So here we have a trend reversal starting down here and we start to climb up. Now, just go over that for him. And you can see throughout all this way, from all the way back here where this trend reversal started, we have all this, volume that shows us the volume by price. And you know, like I said, that's one of the greatest tools, you know, I believe on this site.
Well, thank you. Yeah, no, it's really interesting to see on ECL. There's pretty much anyone who bought, you know, I don't since at least that test of support is down right now. So, you know, a lot of the time that volume by price, depending on where it's anchored, will definitely kind of act as a magnet. And I'll go to a
Yeah,
couple examples as well on that.
yeah. And you know, interestingly enough, if you look at this one, the trend lines, it came right back to the trend line here and bounced off. So this might be another thing to look at if the market, you know, turns around. So that's something to, you know, interesting too. But what I wanted to go over as well is I wanted people to understand levels and patterns. And this is something I saw on Thursday. This is the SPY future. So here we have the opening. Actually, here, let me pull it up on here. It'll be easier for everyone. Okay, so where is it? Oops. Okay, so the S&P 500 futures. Okay, so this is open here at 9:30. Then we're at around 10:30 here. You could see we start to form a left shoulder. Now, you can only really see this pattern if, well, you can only see this pattern forming really if you see a left shoulder and a head forming. But at first, you know, I'm just stating what we see here. We have a left shoulder, as the arrow, you know, explains. Then we dip down, we come higher into the head, which is also a bearish pattern, by the way, the head and shoulders. And then we dip down again, we form a mini shoulder here. And from this level, we're just holding the fib level right here. And as soon as we broke the fib level, it just crashed down. So the head and shoulders is a great, you know, bearish pattern to look at. And many did not see this throughout the day. We took an entry on this candle right here because we saw the left shoulder and the head forming, and we were, you know, kind of, you know, betting on the right shoulder forming. We also added a new position on one of these candles here after that dip, and then it just fell right through. And we had levels of 30.28, which, you know, as you could see here, the fib fell through. And from there, we had levels of 29. Actually, we had 13 first. Where's that? Yep, right around here. And then, you know, from there, we just fell right through. And, you know, something people need to learn, and which really helped me become a better trader, is patterns, finding trend lines, you know, using everything to, you know, your liking. So that's one thing to look at as well. And Jake, anything you want to go over?
Sure. Yeah, I'll go over a couple examples. I did have a case study on Neo from last week that was interesting. And the thing is, I want to mention a lot of these case studies that we go over. At least the one I'm going over today, Neo. I actually didn't trade this, but it was a cool example of, you know, using the anchored volume by price. So we'll go over Neo. If you can see my screen here, I'll switch to the chart in a second. Just want to give you kind of how we started this. This was on, I think, Friday's close or Monday's close. And what you can see here is I started the volume profile from this low here, and we'll get a better view of it here in a second. And what I did was I anchored it from this area because that's kind of when the status quo changed. That's when buyers came back in and the trend reversed. And so you can see from this particular point, we started this volume profile when the price was at 133. And you can see most of the volume has started to accumulate in the, you know, the high threes and the low fours. And so what we had after that was we had kind of like it's almost like a coil tightening. And so you've got all of this volume holding within this range. You've got a gap down. And then the next day, you've got this massive gap up. Because at the end of the day, if there's no supply available, the price can't drop because price drops based on supply. So you can see as, demand starts to tighten up and supply starts to dry up, you've sometimes got these huge moves up. And so we saw this on NEO. I didn't make this trade, but we also saw it on CGC a couple weeks ago where we did go over that case study. Same type of thing. If I go on the daily here, let's anchor the volume by price. As I mentioned, generally, I like to anchor it from this capitulation point or a specific reversal point. And you can see here the same type of things happening on CGC as what was happening on NEO a few days ago. We've got, most of the volume since this capitulation point on November 19th is holding around $20. So there really wasn't a ton of supply below to, there wasn't a ton of supply to drop the price. And so that's why you saw as much as, a 25% drop in 9 days sucks. This is actually pretty normal for CGC. So the fact that it dropped lower relative to the market, I mean, we dropped from 25 to 1870 and 17. So this isn't not normal. And the reason why I actually held on to this position, I still am in a position. That doesn't mean go buy it or anything, but that's what I'm trading right now, is because we did catch a bid right here, and most of that volume is holding in the 20s. So it will be interesting to see what happens here, but this is just another cool example of anchoring it. So notice if I anchor the volume by price, let's say from this reversal point, we're going to almost see the same profile. Since this point on September 18th, we're still experiencing most of that volume holding here. So, Tilray was a good example of this before. We had the volume profile anchored from this previous point, and you can see what happened. The price literally went straight up to this point and then pulled back, because this is where most people were holding, at break even from this reversal point. So, this is something that can be very subjective, just like the anchored VWAP. But you really want to start this anchored volume profile from a important reversal, whether it's this one on January 8th, whether it's this reversal to the downside. You can see that, most of the volume is holding here. So what you'll see a lot of the time, I just put magnet above question mark, but a lot of the time you'll see the price kind of mean reverting back to where most of that volume is holding. So, for Tilray, you'll notice that, most of this volume is holding at a lower area than we topped out at. So does that mean people are kind of slowly selling off and distributing their shares at a lower price? Will this act as resistance for another leg down? I think a lot of that is based on just the market in general. But to go into kind of a more relevant example here with the S&P 500, if we anchored it from this kind of status quo point, and I call it a status quo point because this is where we really started the uptrend in October after this choppy period. And you can see from this particular area, most people are holding at a loss. Any shares that were bought since October 3rd, a lot of them are holding at a loss. So either one, people stop selling and, that drives the supply up, or two, people holding at these 320s areas start to sell at a loss. And then this volume is then redistributed down below, and it kind of creates a new level. So, it depends where you anchor this from. But if I anchored it from really the crucial status quo point in December,
yeah, look at all that.
Look at how much volume is holding at this area. I mean, it's like I say this a lot. I didn't even study physics, but it's kind of like a physics equation. Physics have certain principles and certain rules that just can't be broken. And based on this, the market is in a very interesting spot where, rules can be broken. That's the thing about the market. Emotions don't have rules. Panic doesn't have rules. So if the panic does continue, people could easily drop this down lower. But, from just looking at this as like a equation, there's so many people holding at break even right now. They're probably going to buy more rather than sell, unless this is some type of bigger systematic kind of move that's happening, that, something underlying is going on. But, this is a massive demand zone. And,
Yeah, correct.
and the reason why the price was able to drop so quickly is because from this particular point on December 28th, or excuse me, December 24th of 2018, since we bottomed, there wasn't a ton of people holding up here. Most of the people were holding at profits from this area. So, I don't know about you guys, but whenever I'm in profit, it's a lot easier for me to sell and click market order sell than it is, when I'm break even or a little below my average cost. So that's kind of the phenomenon that happened. If you have a lot of people holding profits and everybody tries to exit the door at the same time to take advantage of those profits, supply outpaces demand, and you've got quite a big move down. So that's something to keep in mind with the anchored volume profile. Notice if we anchor the VWAP as well from here, you'll see we literally tested this exact area. So I really like to use the anchored VWAP and the anchored volume by price in conjunction with each other to look for this type of confluence. And, this is another cool example from last week where I simply just created this big sensitivity alert on the anchored VWAP. And you can see the price literally kind of traded right within this cloud. So I got an alert. I forgot when exactly this alert went off, but I got the alert on Friday, and I knew that we were finally getting close to this anchored VWAP, which historically has proven to be a pretty important area. Anytime you've got, a move down here, it becomes a little bit of a V to the upside. So here you got to move down, V to the upside. The thing about this crash that's even more unique is when you've got these absolutely massive drops down, you generally will get a V to the upside. Not always. We did, I think you mentioned futures are down huge right now, but, that's something that I typically use as a contrarian indicator. So if the market was up 3% today, I would probably expect it to be down by morning. But since the market's down today, I would actually probably expect it to do much better by morning, just because when we're in this type of volatile scenario, sometimes the market can't stay 3% up or 3% down for a long time because there's so much money flowing in and out. You've got a lot of that kind of volatility back and forth. So those are a couple case studies I thought were cool using the anchored volume profile. And, the one thing that's really cool about this is, I've got this static chart here and I can still change the volume profile without having to worry about, scrolling the chart. So that's probably the most unique thing about this on TrendSpider is the ability to localize that point in time at which you want to start your volume profile from. And that sometimes will give you a much different picture than, let's say, if you just had the chart open here and your volume profile started all the way back here, because that's how most platforms work. The volume profile is simply just a function of how far back you are in history. And from that point, it starts the volume profile. So,
yeah, like I said, these two things right here. I didn't go over the VWAP, the anchored VWAP, but these two tools here really make TrendSpider, possibly one of the leading, technical analysis sites on the market. I believe, these really, really can help someone's trading, and there's just a lot of studies that you could do on them that can turn out, possibly a bad trade into a good trade, looking at where support is, where resistance is, and stuff like that. But going over that volume by price there, there's so much, volume holding right there, like you said. And above it, they just dropped it so quick because there was nothing, holding it, keeping it up. So I totally agree with you there.
We have a question by Ed. So investors who have a diminishing gain, about to break even or loss, are natural emotional sellers to avoid the pain of a loss. Some people are, but most market participants will likely sell before that when they're in the gain. And especially when the market's dropping so quickly, that's when everybody goes for the exit. Not everybody does that, but the majority of people, are going to sell before break even. Now, some of the people that didn't sell, in the last week were probably people just who aren't that in tune with the market. But a lot of people, that I personally know that, trade quite a bit for a living, most of them kind of saw like, okay, divergence is starting to form. Other things are starting to form here. I'm going to cash out. So as soon as the rest of the world, mostly retail traders, do that, it's very easy to sell. But, just based on supply and demand, you're going to get to a point where there is no more supply because so many people are holding at break even. So, whether that's a break even price or a new dollar cost average price to get into, which would be this area here, that's generally where you find supply drying up and demand starting to outpace supply again. So, just based on how many people are holding at this level, it's going to be hard to drop the price further. Now, there was an example last week on CGC where we actually did get to like this area down here before we caught a bid. And there are gaps below. So, when there's panic going on, anything's possible. But there is a point in time where you do hit these supply and demand zones, which generally will allow price to catch a bid in the short term. But if we look at any other big move in the markets in a longer term setting, even the financial crisis, you didn't go straight down. You had these legs down. And that's kind of, if that did happen again, that's what I would think happens. But the market has no rules when it comes to emotion. Emotion can really, emotion can really throw a curveball and everything. So that's kind of my explanation for why we will possibly find a demand zone in that area shown by those break even. Kind of by those people holding it break even here. Hopefully that helped a little bit.
Yeah, and something like you said before as well. If you honestly look at this whole entire chart here, most of these dips, honestly, about 80 to 90% of these dips have been V bounces.
Yep.
Going back from how far is that? I can't see really.
Since we capitulated in 2009, I kind of started it on this.
Look at that. Here. They're either like mini curling bottoms or just straight up V bounces, and they go right back up.
Yep. And even if we look at like, this right here, when we broke down through this level, we dropped, but then we actually went up. And this was in the financial crisis. So, the fact that we dropped so hard and so fast, to me, just, I don't know. I've seen enough of these crashes where, sometimes they just can't sustain that long. I mean, could we continue to drop next week? Absolutely. Or the week after that? Yes. But, based on the VIX back test that we did, these heightened levels of fear, in the darkest of times, i.e. 2008, 2009, 2011, when we had all the European data that caused the market to tumble, generally you've got a nice reversal afterwards. Or the VIX kind of just stays there. It doesn't necessarily, move higher. So that doesn't mean the market can't go down more, but back testing that elevated close on VIX is a little telling. It would be hard for me to just want to buy the VIX more unless I thought we were in some type of 2008 crisis where, someone's getting liquidated and it's not over, which could happen too. So, that's my spiel. I'm not an advisor. I'm not licensed. I can easily be wrong on any of this stuff, but from just using the back tester, using the volume by price on TrendSpider, these are kind of the reasons why I'm thinking that. And we'll just have to see what happens. But regardless, that's why trading is trading. Trading, yes. You can make money up or down. You don't have to be a long only trader. Or you just wait because for me, I personally don't like to buy puts or short a lot. I prefer to wait for a very big inefficiency in a price, generally some type of divergence with the percent range. And then I'd rather just buy the dip than try to guess the bottom. And
so that's how I trade too. I'd rather be, long.
Yeah,
But also,
you know,
oh
you feel like a hero when you make a lot of
yeah,
money shorting the market, and it feels great. But I prefer to just wait for the inefficiency on the long side than the short side,
true.
because I've gotten
Uh,
burned plenty of times trying to short the market, and sometimes it works, but a lot of the time you're betting against central banks that have always
yeah,
historically
and
kind
especially in the market that we're in. Obviously, not this last week, but and going back to what you said as well, we could bounce here, but right after that, we can go right back to new lows, and break those supports and go even lower. So there could be a bounce this week, but you just never know.
Yep, and uh, I don't know what's going to happen. I'd rather just have the market kind of do its thing, and what's important is to always know the levels ahead of time. So, like we talked about before, for me, gaps are always going to be the most kind of important thing for price, because those are where kind of inefficiencies are,
True.
and that acts as a magnet a lot of the time. So for me, if we were going to really look at the gaps way back in time, there is a gap below at 264. So, in the realm of possibilities, it is possible we continue to fill that gap. And honestly, I prefer to have a gap filled than, have it hanging there and then it fills in a huge crash. I'd rather, have these fill relatively quickly, kind of like how we did here. All of these gaps you can see filled so fast, and this one didn't even fill. We just gapped right under it. So this, if I were to like have targets or some type of reference in mind, what to look for, I use gaps. I know that there's a gap at 297. I know that there's a gap at 310, but I also know from a bearish side of things, if we did continue this 272 and 264 gap is probably going to be something to keep in mind. And the fact that the Qs have so many gaps below that haven't filled still yet, keeps me a little bit on my toes, and definitely lets me know that there are still possible downsides below. And this is just from October. I'm sure if we looked back further, there would be gaps just like the SPY from, February and March of 2019. So, hope everyone has a good trading week. Everyone's going to trade this differently. We will post some more charts tonight, just kind of highlighting some different things. But from a chart perspective, that's all I wanted to go over. I'm happy to take a couple. Chart requests if anyone has them. But we're not going to be. I think. Yeah, Dan, I answered that. My answer essentially was just, generally those people are going to sell before they get to break even, and generally once they're at break even, a lot of people have like that fallacy. Well, yeah, it's kind of like the sunk cost fallacy. Oh, I've held it for this long, I might as well just keep holding it. Even if it starts to drop, a lot of people have that mindset where, well, I've held it this long, I might as well just keep holding it. And anybody who has that mindset adds to the supply drying up, because anyone who sells is part of the supply. So let's see. I think a few people had some chart requests. We had SPCE.
I know they're all coming in. They're all coming in now.
All right. Well, I'll do a couple and then I'll hand it off to you. Dan wanted to see your thoughts on IDYA, Nick.
IDYA. Okay, hold on. Let me see that.
Let me pull up Space. That's always a fun one. That was actually a really cool case study a couple weeks ago with the anchored volume by price. Pretty much the poster child for what we looked at on NEO and CGC, where you had a ton of volume holding in this area where we were consolidating. And then once supply dried up, demand outpaced supply, you've got your next move up. So that's one. That's on the 65-minute. That's why that looks so weird. Let's do this on the daily. So I anchored it from here. And oh, look at this. This is amazing. So notice how perfectly this previous area that essentially all the supply dried up at and we broke out, this area became perfect support. And notice how it was in confluence with the 3.618 support as well. And this is a really cool example, actually, of one, how price caught a bid right at this previous demand zone. But two, notice how quickly the price broke down here. And the reason the price broke down here is because there was nobody holding at these levels. Everybody was either holding at 35 or they were holding at 20. So there was nobody here to really capture price because there was no previous holders. So all of these people holding at 35 quickly started to take profits. And then all of these people down here that were holding from this area all of a sudden quickly became break even. They're like, well, I'm not going to sell. I'm probably going to even average down. And then that's where you've got your demand starting to outpace supply again, and you've got your nice move up.
Yeah, you also got to consider, the massive pump on that. It was pumped straight to the earnings date, and then right after that, you see the collapse happen. So they, pumped to the news, the catalyst, and then they sold right after it.
Yep. And this is cool where you can see that since we anchored the volume by price from December 6th, and the reason I did that is because it was pretty much the day before the status quo changed. If we anchor it from here, notice it's really not going to change much. So if you anchor it anywhere from this kind of reversal point, it doesn't really matter. You're still going to get these volume levels. And what's really cool about this is notice that this is a gap, right? So since we're measuring this from November 25th, there's technically volume in that gap. However, if we start the volume profile from this point here, this reversal point, notice that there is no volume in this gap because from this particular point, there have literally been no shares traded at all from 27 to 25. It's completely empty. There's no holders from February 20th. But if we move the volume profile back a little bit, you'll see that the gap is still there, but there is still a little volume holding here from this move up here. So this candle right here, that's that volume right there. So kind of a interesting way to look at it. But space is thank you whoever asked about space, because this is like a textbook example of catching a bid right at this previous volume. I would call it like a volume shelf. That's kind of what it is. It's kind of like a shelf of volume, and price typically either will find resistance at these shelves or support.
Wait, that was you also had the fibs there, right? Correct?
Yep. And I got the fib here too. And what's interesting is these are all extensions. I actually measured the fib from this point here on November 11th down to where we crashed. And these are just extensions. So, this is a really cool case study on just using Fibonacci extensions. You don't always just have to draw the measured move on the fib level. A lot of the time, I learned this from Tarek Saab. He's one of our partners. A lot of the time, the 618 extension or retracement is going to be, pretty much the same if you go out for far enough. So, for example, this is November 11th to November 25th. We move so much that this extension is probably just as important as an extension that we draw here. Exactly. Look at that. It's the 3.618 extension on this measured move is exactly the 618 extension retracement on this measured move from November to February. So it's actually pretty cool that you can see how these levels actually start to match up over time. So that's a really cool case study on that, where it doesn't matter if you used this measured move here or this measured move here, you're literally going to get the same exact 6.618 zone. And so that was a massive confluence of stuff here. So SPY levels, I think we're getting so SPY levels. We just went over to SPY. I mean, the gaps are going to be the areas that I am looking at either on the downside or the upside. So anything indicated with this orange are gaps that have filled. Anything that is green are gaps above that have not filled yet. So if I was looking at this, I would be, I'd be wary of the gaps around 271 to 264, but I'd also be aware that there are gaps above as well. This is simply the way I look at it. Nick, I'm sure, has a slightly different approach, even though I think he uses gaps a lot. Gaps are generally my first levels that I'm looking at. To answer Derek's question, fibs.
I was just about to type it out.
Yeah, fibs are something that happen across the board. And a lot of the time, fibs just become a naturally self-fulfilling prophecy in the market. So many people are looking at fibs, then it actually becomes self-fulfilling. Some of the bigger time guys that we work with, our partners, are using fibs. And so, big money, if they're watching these fib levels, they become self-fulfilling. Fado. Fado wins a free year of membership for Space Chart. So to answer your question, to answer your guys' question, those would be the areas that I'm most concerned with. Just gaps. Nick, any feedback from you? I mean, I think you use gaps a lot as well.
Yeah. So I mean, what I really do, I honestly do not. I trade the S&P 500. I trade it, SPY, but I focus charting wise only on the futures really. And the reason for that is because, that's what, basically most of the other high well-known traders do that I follow. And with that, you can just see the levels better, in my opinion. I see a lot more levels. I see a lot more patterns. And I mean, I could tell you the levels that I see, from 100 points up and 100 points down right now if I really wanted to. But if looking at SPY, I'd have to go in a little deeper because I'm just so used to focusing on the S&P 500 futures than SPY. But when I do trade, longer short, I only trade using SPY. So, I mean, I know that didn't really help that much, but, my main focus is focusing on the futures. I feel like it gives you a better understanding of how to actually trade, SPY, in my opinion. And I know a lot of people that, do the same exact thing as me, and I've done very well.
Let's see. If we anchor a VWAP here, somebody mentioned Gilead, so let's just do that one.
That's another crazy one.
We capitulated here on January 21st. This was the true trend reversal. I anchored the Alpha Trends VWAP from this particular point. Notice how we did close above it. And then let me throw on some volume profile here, and you'll notice something very interesting. We dropped right to this previous area of, like literally to a T. So this is where you can use both of these together, right? You've got the anchored VWAP, but notice how the anchored VWAP did not capture the wick here. We technically closed above it, but the anchored volume by price is where we actually truly found a demand zone here. And so, notice here, this was a previous support area. There was a ton of volume here. This is one reason why the price was able to go up, because so much volume was holding here. Demand started to outpace supply, and we've got that correction of price to correct for the inefficiency there. And then notice that there was no volume holding up here. So naturally, if there's nobody holding up here, we don't necessarily know when this is going to end because we don't have a supply zone above. So what I would do is I'd probably just put some fibs here from this particular point here to here. And let's see, I bet this hit the 2.618 on the dot. Yeah. There's your fibs. So the fibs are really important because when you don't have like a supply zone above, like we did in CGC or Tilray, you a lot of the time you want to use these fib extensions to see where the price may catch a little bit of a sell side action. And it's a lot of the time if it's not a target, like for example here, CGC. My target above for CGC is simply based on, well, it depends where I anchor it from, right? So if we anchor it from this point, I've got these supply zones above that I know we're going to hit supply because I know a lot of people are holding at break even at this point. So once these people get back to break even, they're going to be like, okay, I'm finally getting out of this. I'm selling. So to answer Ed's question, I think he just had it opposite because Here, you're exactly right. If somebody's holding at $22 and they're down, as soon as the price gets back to this area, that's when they're selling, and that's going to add to supply, and that's likely why this is going to act as resistance if we've got a big push up. So actually, Ed, if you're still on, that was a great point. This is exactly what you're talking about, where as soon as these people get back to break even from being down, they're like, okay, I'm getting out of this trade, I'm moving on. So that is a good point Ed made earlier about people holding at break even. Is right when they get break even, they're like, I'm out of this. But when the price has been above their break even price, when they get back to break even, then they're like, okay, I'm definitely holding, and that's what drives up that supply. So here we've got a resistance zone above based on simply a function of the volume profile. But if we go to Gilead, remember, we don't have that volume profile here. There is no volume profile above for us to have a price target. So that's where your fib extensions come in. I usually don't add a ton of fibs. I usually don't use the 1.3, 1.382. And let's see, what's the other one? It depends on what I'm looking at. This is a much kind of easier chart to look at here. And you can see, rather than using that supply zone as resistance, we had fib extension. And so to answer Derek's question, there's not a lot of reason why fibs work other than they become self-fulfilling, and just in human nature, you're going to see fibs happen a lot. And, it's kind of one of those weird things that just make sense. I used to not use fibs at all. Trust me, it took a while for me to actually believe in these things. And since I was taught the right way to use them, they have been incredibly useful. Especially like if you look at the Tesla move, if you look at like the SPCE move, all of those found resistance at some type of 0.618 extension area. So, that is an example on Gilead. I think we are running out of time. I'll try to answer one or two more other requests. Sorry, I just didn't want to go over requests. I kind of want to just explain a little bit what we were looking at. We'll look at Tesla. That works.
The big mover.
Old Tesla. All right, Tesla. Well, one thing to start out with, as I mentioned, first thing I look for are gaps, right? We've got a gap below here. We've technically got a gap below right here. We've got a lot of gaps below. So that's something that I look at immediately. And one thing that's going to make this a lot easier, Dan, sorry if I'm letting the cat out of the bag here, but we are going to have a gap detection. So I won't need to draw these gaps anymore. The gap is immediately going to show up when I turn on gap detection. That's something that is going to make my life 10 times easier. I'm not sure exactly when this is going to be released. It's something that Dan's been playing around soon. Okay. That Dan's been playing around with.
Next few days.
Yeah, I hope so. Because it is something that's really going to be useful in these types of scenarios where, if we're breaking down, we want to know where those gap fills are. So that's something that I'm going to definitely be using a lot. So if we want to look at Tesla quickly on the weekly, notice one thing here, right? If we anchor from this point, September 25th, we could also anchor it from this absolute low here. Notice how we dropped very quickly through this area because there wasn't a lot of holders. There weren't a lot of people holding here that were, at break even. There's a lot of people holding here around 570 that are still holding in the profit. And there's a lot of people holding at 780 or so that are holding at a loss. But in between that, there's not a lot of shares to add to the friction of price, i.e. it's able to drop very quickly. Or if there was a gap above, or if there was a, let's say we were here and the price was here, it would be very easy for the price to go up because there's not a lot of overhead supply. There's not a lot of, people holding at break even below. So that allows the price to drop very quickly. Tesla's been interesting. I mean, if we go to a monthly chart, if we want to go back to this example here, we've technically been here before. I mean, we broke out of this very important area of resistance around April 2013, and it pretty much went straight up since then. we had a very important area of resistance here for, about 3 years, finally broke through it. And, are we going to get the same type of move we've got here? We'll see. One thing I want to mention here is if you turn on log scale versus regular, it doesn't look as good. So you definitely want to use log scale with Tesla because of the huge range and price that it's had. But overall, the monthly candle did close on Friday. We've got, this interesting candle here showing sellers did come in. This would be crucial if we had a raindrop for monthly candles, because then I could see where that volume is holding within this wick. And I'd be able to get a better idea. So that is something that we're also working on, are the weekly and the monthly raindrops. So you're actually not only going to be able to use the daily, but you'll be able to see where that volume was flowing around within the longer term candles as well. That is something that's really, really useful for me, especially when I'm looking at, important areas of a breakout or breakdown. If we do start to break out and we go on SPY, I will start turning on the raindrops, because, I need to see, is there really volume within these wicks? So notice here, we did have a green raindrop on this move down. That doesn't necessarily mean much. It just means that volume was higher than in the second half of the period than it was the first. And especially this raindrop doesn't really do much for me. What I'm looking for is an area where you've got a lot of volume at the top of the price range and you're breaking out of an important area. So this is an example that I like to share on Amazon. This is like, if we had a textbook for raindrops, this would be in it. For an example where, notice here, on right before we had earnings for Amazon, notice this raindrop. If we go to a regular candle, and let's say you were using the EMA or whatever, indicator, you can use this with any indicator. Notice that we couldn't really see what was going on in this wick. All we knew was that we gapped down, but we closed higher than what we opened at. So personally, I like hollow red candles, but that's not convincing enough. So what you have is you've got this raindrop showing that within this wick, which we actually did not close above the EMA 50 on the hollow, notice how much conviction there was by the buyers above this line using the raindrop. So these are the things that I use the raindrop for. I don't always have raindrops on my charts because I'm only using them when I'm really looking for an important area of like a breakout through support or resistance. This will be the last chart request that we go over. This is Google. Google is one of those examples where previous resistance is acting as pretty hard support here. Notice from, April 19, we tested this area multiple times, and then we finally caught a bid here on Friday right at this area. So it'll be interesting to see what happens with Google. If we go to the hollow candle here, let's say we go to the monthly, you'll see that technically we broke out of Google, this ascending triangle, and now we're kind of essentially just retesting this previous area that was shown on the daily. So some charts look like, the Great Depression just happened. Some charts look like, we just had a little bit of a correction. So it really depends on which one you're looking at. But from a long-term perspective on the monthly candle, there's not a ton of difference between this candle and, and this candle right here. So this type of chart kind of makes me a little more bullish, because it's like, okay, we just literally textbook retested the previous breakout zone. You want that.
Yeah, correct.
If you don't have that, then you're going to get really overextended. So that's something on Google that's interesting to see on the monthly. I know this is Sunday. I've taken everybody's time a little longer than we thought. Let's skip that. We just went over chart requests. This is for anyone who wants to help spread the word about TrendSpider. We have created a new system where any link that you share of a chart is actually tied to your affiliate account. So if you want to help spread the word and earn some money on TrendSpider's affiliate program, helping spread the word, you can easily do that by just going to trendspider.com/affiliate, signing up, and then I will put you on the 10% recurring.
That link is
and then we'll kind of go from there.
Hey Jake, if you don't mind, can I just have a minute to talk? To go over Dan's chart request as well,
Yes, yes,
because I know
yes.
he
I
said
completely forgot about that.
no. It'll take a quick minute to. It won't be long at all.
Yep, your
Um,
screen's up. There we go.
so Dan, you wanted the stock, correct? I believe. So yeah, this is pretty interesting here. You see the same pattern here. I mean, I know this is more dragged out. The drop here. Wait, let me make this a little better. The drop's a little more dragged out compared to this one where it's only like 2 to 3 weeks. This one's like 4 to 5. But we got the same exact pattern here, slowly climbing up, slowly climbing up, and then you have this big breakout here. So it's possible, we're at the support here. We have two nice trend lines possibly right under us, and you can see it kind of guides it up, there. We had the support with the volume by price at the trend reversal here, or that candle that kind of trend reversed there, and it's very possible with also this 14 SMA. We close right over that we could push over this level here at 750 and push this high. I mean, we'll open candle around here in the 8 levels and could see new highs again possibly. I think this is actually pretty interesting play. I might actually join you on this if you're actually in it. Might throw a couple, maybe 1,000 or 2 shares. This looks like it could easily go up at least 50 cents, 40 to 50 cents here, if not $1. So, this is a pretty interesting call out there, Dan. Thanks for the input on that one. It was great to look at that.
Cool.
And, if anyone's interested in learning a little bit more, my room is open for people if you're interested. It's a paid chat room. Nothing's financial advice as well, such as, a disclaimer here, but I've definitely helped out some people. We have a great community growing, and I believe it's only going to get better, just like TrendSpider. So I hope everyone enjoyed, our session tonight, and I hope you guys learned a little bit. If you guys have any questions, please contact any of us on social media, either my site, my chat room, contact Jake, Dan. We're all here for you guys if you need any help.
Absolutely. And for those that do not have the website yet, it's bulltradefinder.net. You can also find Nick on Twitter. Nick, if you want to throw your Twitter handle in there so people can follow your trades and all that good stuff, definitely make sure to check it out. If you would like to get 15% off up to 12 months, please use KNOTS15. And, any questions you have, please feel free to reach out. We not only do these Sunday webinars every weekend to answer questions, just go over the overall markets and how we're using TrendSpider as users as well, but also answer any questions that you have, using the platform. Everyone who joins these is either one, trying to learn about the market, or two, trying to learn how to use TrendSpider in the market. So we're all here to learn, all here as a community and as a team. So, thank you everybody once again for joining today. We did go over a little bit. Sorry about that. But hopefully it was worth it and you guys were able to learn some good stuff. Once again, bulltradefinder.net is Nick's website that you can check out. He just posted his Twitter handle as well. And, once again, everybody have a good week. Stay healthy. Dan's a little more into this than I am, but definitely, if you do get in a position where you need to throw on a mask, I guess go for it. But in the meantime, I'll be sitting in my house most of the week, quarantining myself and trading the markets. So thank you again, Nick, for joining.
Thank you for having me. I appreciate it, guys.
We'll continue to post and all that good stuff on Twitter for stuff that pops up. And if you guys have any more questions, hello@trendspider.com is where you can throw the questions at. Thanks, everyone. Have a great week. And we'll be back next week for another Sunday chart show.
Okay. Have a good one.
See you guys.